Let's break down some of the numbers and the latest figures and what they mean to Americans. Joining me now is Gabriel Ehrlich, the Director of Research Seminar in Quantitative Economics at the University of Michigan. Welcome to the show, Gabriel.
Thank you very much.
So what is your reaction to this 6.5% second quarter growth, especially since some much higher numbers were originally projected?
Yeah, the consensus expectation was for growth of about 8.5%. So that top line number is a little disappointing relative to expectations, but it's still a very solid number. It brings GDP back to a new peak above its level prior to the pandemic. And if you had told me a year ago that this is where we would be today, I would have been very happy. So I think it's important to keep some perspective about the number.
So does it matter that it missed analysts' expectations? Should we read anything into that discrepancy?
The markets didn't seem to mind too much. And I think part of the reason is that the details underlying the top line number were a little bit less disappointing than the top line number itself.
So which industries fared the best and which industries fared the worst? And how did supply chain disruptions play into this economic growth number?
So, looking at the big picture, consumption rebounded about as expected. Motor vehicles didn't do quite as well as we had hoped, but consumption was largely in line. When you look at the other components of GDP is where the disappointments really came in. Residential investment and inventory investment both subtracted from growth. And we think that the supply chains were especially important there. The supply chain problems are lasting longer than we expected, and I think than most analysts expected. And inventory rebuilding didn't keep up with the pace of demand growth. Supply constraints really do seem to be preventing inventory restocking, and inventory stocks are very low right now, especially relative to sales. We do think that inventory should start to catch up going forward, and that should support growth over the months to come.
So basically, we could see that people were spending money. I mean, people are going out there spending money. They're not saving quite as much, right?
That's right. That's right. So people are spending. Consumption, it now accounts for about 69% of GDP. So people have money in the bank. They're willing to spend it. It's really the other parts of GDP that are holding back growth right now.
A lot has been made about the Delta variant and some of the numbers ticking up across the country. How much did that variant play a role in what we've been seeing, and how might that impact third quarter growth?
Yeah, the reality with the Delta variant is it's very tough to get a handle on what it means for growth. It's tough to say, going forward what it's going to mean. The optimistic scenario is that it will burn out pretty quickly. New cases are already ramping down in some countries that experienced the Delta wave earlier than the United States. For instance, if you look at the United Kingdom or Russia. In the United Kingdom, it's also important to point out that cases and hospitalizations were really disconnected during the Delta wave of the pandemic. In the United States, that's not the case. Hospitalizations are tracking a little more closely with cases right now. So the optimistic scenario is that the Delta wave fades almost as quickly as it came. The less optimistic scenario is that the Delta variant persists and potentially that we have more breakthrough variants. In that case, we might see the return of widespread restrictions on behavior, and that will hold back the service sector recovery. And one thing that we're keeping an eye on is what that means for school reopenings. Right now, most school systems plan to be in person and open as normal this fall. And the Delta wave could put that at risk.
Right, and we're certainly watching that as a lot of kids under the age of 12 are still not vaccinated. I want to ask you also about unemployment claims, also missing expectations. What are you seeing with jobs in the United States right now?
The labor market is recovering pretty quickly, all things considered. We'd always like to see a stronger recovery. We're still not back to where we were before the pandemic, so there has been a disconnect between GDP on the one hand and jobs on the other hand. Jobs are going to take longer to come back. The unemployment insurance claims can be noisy. We've seen a lot of progress since the start of the pandemic. There's still more progress to be made on unemployment insurance claims.
And one quick last question, the U.S. Senate getting to work on that big infrastructure deal. What will you be looking for in the days and weeks ahead?
Well, the first thing is, can they get it across the finish line? I used to work at the Congressional Budget Office in Washington, D.C. I know that until things are signed, it's anybody's guess how it will shake out. It looks like there still might be bipartisan support for that classic infrastructure bill to the tune of about $1 trillion. We are looking at what the pay-fors will be. It looks like in the language that we've seen so far, there's about Half of the $1 trillion has specific pay-fors, and the rest is a little murkier.
All right. Like you said, we'll have to wait until it's all signed on the dotted line. Gabriel Ehrlich, thank you so much for joining us from Michigan.